Okay, we're live. Welcome to the Bitcoin Digest, where we discuss all things Bitcoin. My name is Kandan, and this is episode 2 of our daily podcast. Just realized that I'm on the wrong page. So, this show is always done online, it's live, and we do this on Zoom. Anyone is free to join this podcast at any time using the details provided on the screen right now. Including the passcode. There's only one rule that we have here, and that's no talking about shitcoins, unless you're dumping on them, of course. But other than that, it's a free for all in terms of Bitcoin discussion. I have a little bit of a list to go through today. I've been thinking a lot about a few things, and I thought I'll be sharing my thoughts to you lot in this episode. Thanks for those who have had the opportunity to listen to the first episode. And if you haven't, then of course, please sign up to the YouTube channel and just simply by YouTube in Bitcoin Digest. That's the first place I will publish it. In the future, I'll hope to publish them to other podcasting platforms. So it can also be listened to on an audio basis. But for now, the aim is simply to have this on YouTube. So please feel free to watch this on YouTube. So just going back very quickly to where we were. So as usual, what we do is we go through the Clark Moody's dashboard, and then we'll also take a quick look at the mempool. And then I've got one article I'd like to go through with you regarding the US Treasury and the clock that's currently running on the US debt. So we'll look at that. And then finally, I also want to talk to you about my new slogan, which basically is don't just adopt Bitcoin, adopt a Bitcoin lifestyle. So I'll be talking to you about that and get into that a little bit more. So that all out of the way, let's jump into the dashboard for the Clark Moody's. So Bitcoin's price today is at 26,890 US dollars. $1 US will get you 3,719 sats. And the market cap of Bitcoin still sits very comfortably at $520.9 billion. Looking at the mining, apologies, I keep getting a pop-up, which is really very distracting. So I'm going to pause for a moment and I will be right back. Hey, back, and sorry about that pause. This is live and anything can happen. And as it so happens, all sorts of things tend to happen when you go live. So sorry about that. Back to where we were. So the hash rate is 352.8 exahashes. Difficulty adjustment is 48. And yesterday I was struggling really to find out when the next difficulty adjustment will take place, and it's actually on the 18th of May. So it was right in front of my eyes, but I just didn't see it. So yes, today, of course, is the 14th of May, Sunday the 14th of May. And so in 4 days' time, we should be looking at a difficulty adjustment. And the change is likely to be an upward adjustment, because the blocks have been coming in at every 9 minutes and 47 seconds. And of course, blocks are meant to come in every 10 minutes. So because blocks are coming in a little bit faster than the 10-minute target time, then there is then going to be an upward difficulty adjustment, and it's targeted for 1.8% of estimated difficulty change. So hopefully that's a little bit much more clearer than my explanation yesterday. So sorry about that. And we learn on this show, we'll continue to learn. The block subsidy, of course, is 6.25 Bitcoin, and that's not going to change until next year, April, which is when the halving is going to take place. So we've got 50,249 more blocks before the next halving, and the halving date is set for the 22nd of April 2024. So pretty much almost a year to date, or thereabouts, less than a year now, less than a year. So that's that. Hopefully that's a little bit more clearer than yesterday. Mempool transactions, there are currently 53,000 transactions sitting in the mempool. I'm sure that's pretty much close to all-time highs. Well, not quite. I think all-time highs must have been around, what, 200,000 transactions, something like that. But yeah, 53,000 is still significantly higher. And we're going to take a look at the mempool in a moment, and we'll get a little bit more better idea around that. The current recommended sats virtual size, the virtual size is 80 megabytes. And blocks to clear is 82 blocks before the mempool clears. Pending fees is 10.5 Bitcoin, and that's roughly around 282,000 US dollars. Time since the last block is 23 minutes, so that's a little bit unusual. Minimum fee rate is 3.5 sats vbyte, but that's not happening anytime soon, I'm sure. What else can we look at here? The median fee is currently 38 sats vbyte. Again, that's not going to happen. Fee estimates at the moment, it's estimating that it'll take 106 sats vbyte to actually get your transaction confirmed immediately. And anything within an hour, again, is also 106 sats vbyte. If you pay 21 sats vbyte, you're looking about a day before you can get confirmation. And if you put 1 sat vbyte, you're looking about a week. I think these are probably very unlikely. I mean, 1 sat vbyte is not going to clear within a week. I would probably say 2, 3, 4, 5 probably weeks. I don't know. It all depends on how this ordinance thing clears up. It seems to be settling down better. So yeah, we're getting back to a little bit of normality, I guess. What else do you want to look at here? I'm not going to go through Samurai Whirlpool. I think it's actually worth talking about some of these as well. So the inflation rate realized monetary inflation rate for Bitcoin is currently 1.75%. That's really low in comparison to something like gold. Forward monetary inflation is 1.67%. I guess when you project forward, it gets lower and lower. Velocity of money is 39. Daily value throughput is $22.6 billion. I'm not gonna lie, I'm not sure I follow that exactly. Of course, we all know that the all-time high was $69,000, and the decline from the all-time high is 61%. So if you purchased at the top, you're probably down 61% for that particular purchase. And that was back in November, the 10th of November, 2021. So it's now been 550 days since the last all-time high, but who's counting? Clark Moody's, I guess. And then in terms of stock to flow, which is that really even worth talking about? No, I'm not going to talk about that. Okay. So that's Clark Moody's. I think we've, in a way, covered the mempool, having gone through Clark Moody's board there. So I'm not going to go through the mempool in that much greater detail now. I guess we can see here, high priority, it says it's 20 sats v byte again. I'm not sure, but if you take a look, it's, oh, wow. Okay, that's interesting. So 16 sats v byte, we was able to get through. That's interesting. That's good. So, and I guess the other thing I noticed is that the mempools, the transactions that are waiting to get confirmed in the mempool, the colors now changed back to this, I don't know what to say, is that brownish color? Whereas only a couple of days ago, and I guess if you look at my video from yesterday, you'd notice that this was more reddish, which suggests that it's really really full. But now that it's almost this orangey stroke browny color, then that suggests that it's calming down, it's cooling, it's not quite as full, whichever phrase you want to use to describe that. Hey, that's what that is. So it's getting better, basically, in short. And clearly some transactions been able to clear using 16 sats v byte. So we are getting there. We're getting back to something as close to normalcy. So that's good. Excellent. Now on to the first article of the day. So this article is by Kieran Lyons, and it talks about there's a significant risk of the US Treasury running out of funds soon. And I'm just going to read through this article because I think it's not a very long article, but it just puts things in context for us, and where we are with the national debt. So the United States Congressional Budget Office has predicted that the United States government's annual deficit will nearly double over the next decade. So just to put that in context, our annual deficit, which is basically the annual revenue generated by the government, by the US government, federal government, less the annual expenses or annual expenditure or annual spending of the government, that is going to double over the next decade. So we're going to be running, or the US government is going to be running double the deficit it is running today. And when you think about that, and I think I'm going to go a little bit on the fly here, I'm going to put the US debt clock. I'm doing this live, so anything can happen. So here we are. So that's national debt, but our current spending for the year is $6 trillion. And our revenue for the year is $4.6 trillion, which means that we have a federal budget deficit of $1.4 trillion. And in a decade, this is the Congressional Budget Office is basically predicting that in a decade, we'll be running a deficit of double $1.4 trillion. So you can imagine what that's like, that we're adding $1.4 trillion every year for the next 10 years. But as we're running that, it's increasing sequentially or potentially, which means that the national debt itself which currently sits at $31 trillion, in 10 years' time from now, it's just unthinkable how big it's going to be. You're just basically going to add another, 1.5 trillion times 10, 15 trillion on top of that. That's 46 trillion. And my maths is terrible. My maths is wrong. And it's a lot larger than that. But that just gives you some context as to where we're going to be in 10 years' time. So let's just having that in mind, let's just continue with this article. So the United States government faces a significant risk of no longer meeting all of its financial obligations as early as June, as per a recent report. According to a May 12 report published by the US Congressional Budget Office, the risk of the US government defaulting on its debt in the near future stems from reaching its statutory debt limit of $31.4 trillion on January 19. The CBO predicts that if the debt limit remains unchanged, the US government could be in hot water as early as June. And we're, of course, midway through May, so we're only talking about 2 weeks from now. It noted that the CBO projects that if the debt limit remains unchanged, there is a significant risk that at some point in the first 2 weeks of June, the government will no longer be able to pay all of its obligations. The CBO predicts the federal budget deficit will be $1.5 trillion in 2023, which is $100 billion more than initially estimated in February. So in February alone, their estimates is already wrong by $100 billion. Good luck for what it's going to be, what their prediction of 10 years' time is going to be. It then goes on to say, a shortfall in tax receipts recorded through April was also noted as having the potential to contribute to a larger deficit than initially predicted, according to the report. However, based on its projected data, the CBO does not expect a decrease in the deficit's growth anytime soon. It was predicted that the annual deficits will nearly double over the next decade, reaching $2.7 trillion in 2033. The CBO predicts that 2033 will witness the highest level of national debt ever documented in US, stating, as a result of those deficits, debt held by the public also increases in CBO's projections from 98% of GDP at the end of this year to 119% at the end of 2033, which would be the highest level of US debt ever recorded. Do I really need to say any more than that? I mean, that genuinely is shocking, and it is worrying to think that our debt is spiraling out of control. And the analogy that I would like to use here is, if you know that your income is larger than your is smaller than your expenses every year, and that your expenses will continue to grow larger than your income every year, you're effectively bankrupt. You're effectively bankrupt. That's what we're talking about here. And if the prospect of you ever paying back your debt, if there is going to be a prospect of you ever paying back your debt, it means that your income must be larger than your outgoings. So that difference between your income and outgoings, that difference is what goes towards paying those the actual debt itself. The debt itself will not stop growing unless you are actually making a concerted effort to pay that down. Now, even worse than that, even more egregious than that, and let's just go back to this national debt clock, is the interest rate on the debt, because the interest rate on the debt is actually increasing the debt every year, even if you do not, even if your outgoings matches your income. That national debt, the $31 trillion, is not going to go down. It's still going to be rising by at least the interest on the debt. And that is an ongoing exponential thing. So again, my very simple mind, I've got a very simple mind. I'm not very clever, but just looking at this, I mean, I can't imagine why people are not worried about this situation here. They should be. And I'm not going to get into the whole money printing thing. That is way over my head. The whole money printing thing. I'm not going to get into that. But just looking at this, forgetting all the money printing and all of that, just putting all that to one side and not even factoring that into the equation at all. Just simply talking about basic interest on debt and your income not being able to match your debt. You're running a budget deficit of $1.4 trillion every year, and it's only going to rise. And by their own estimation, they have underestimated this. Why people are not worried, I do not know. And this is one of the reasons why I am absolutely bullish on Bitcoin. So that being said, let's move on to my new quote, which I shall end all videos on, and that's: to avoid getting wrecked, don't just adopt Bitcoin, adopt a Bitcoin lifestyle. So what do I mean by this, adopting a Bitcoin lifestyle? And what I mean is, let's talk through through some examples. I think that's the best way to it's not just enough to buy Bitcoin, because buying Bitcoin could mean all sorts of things. You could buy Bitcoin on an exchange and then keep the Bitcoin on that exchange. Do you own Bitcoin? The answer will be no, you don't own Bitcoin. You own an IOU, and the exchange owns the Bitcoin. And that's not a Bitcoin lifestyle. That's not how Bitcoin was meant to be used. That is not what Bitcoin was created for. Bitcoin wasn't created so that you can buy it and keep it on an exchange. You are not adopting a Bitcoin lifestyle. If you buy Bitcoin and leave it on an exchange, you don't actually own Bitcoin. So you're not on a Bitcoin lifestyle. You may think you have purchased Bitcoin, and that's your thought, but you are completely wrong, because all you own is an IOU. And until that, for me, that is one of the fundamental points of adopting a Bitcoin lifestyle. Actually taking full custody of your Bitcoin. That is the time where you are beginning to get onto a Bitcoin lifestyle. Anyone who has a majority of their Bitcoin on an exchange is not a Bitcoiner, does not own Bitcoin for one, and is not a Bitcoiner for two, and has not started to begin a Bitcoin lifestyle yet. So that, I hope it's beginning to get a little bit clearer. So the key phrase here is not your keys, not your coin. And so for me, the very first phrase that encapsulates the Bitcoin lifestyle is not your keys, not your coins. So you must absolutely have your own Bitcoin in your possession. Now, I understand that not everyone is going to know how to do this. A lot of people are very worried about holding their own keys, and having that much responsibility of holding their own wealth and being responsible for their own wealth. And, you know, things like losing their keys, or making a mistake somewhere along their security models, and then losing their Bitcoin as a result of not them having a proper security model for how to hold and properly custody their Bitcoin by themselves. So I understand that, but that's where families can come in. You've got your Uncle Jims of the world that, you know, people should be able to turn to their Uncle Jims who can help them. Uncle Jims might be people who are very well versed in Bitcoin, who are immersed in Bitcoin, who they trust, and who can show them how to custody their own Bitcoin. Or, you know, they may have other other sources like they may run their own node, and so they can actually help them to custody their Bitcoin for them on their own nodes, and then give them access to apps which can then use to leverage that. So LM Bits is a good example of how that could be done. We've got Fedimins coming up, which also could do this sort of model as well. So there are ways around it, but ultimately, people who do not hold their own keys, they're not on a Bitcoin standard. And sorry, they're not running a Bitcoin lifestyle. So that's the first analogy that I wanted to use, or the first characteristic of a Bitcoin lifestyle, in my view. And the second characteristic of a Bitcoin lifestyle is adopting a low time preference to what you do. So a good example of someone who adopts a low time preference is another phrase I'm going to turn to, which is staying humble and stacking sats. I absolutely love this phrase. This phrase was coined, obviously, by Matt Odell, who I absolutely love. I think he's amazing. And shout out to both Matt Odell and Marty Bent. If you haven't, I'm sure a lot of people would have listened to the Rabbit Hole recap. But if you haven't listened to Rabbit Hole recap, then please go definitely check them out. It's run by both. It's hosted by both Matt Odell and Marty Bent. But they both run their own separate shows. The Citadel Dispatch is hosted by Matt Odell, and we also have, I think, the TFTC, which is run by Marty Bent. So check those two out. Lots of high signal Bitcoin, high signal there. I certainly learned a lot from them over the years, and it's guys like that that really inspired me. As I said, I'm a very plain and simple person. I'm not very clever, and yes, I'm hoping that I can at least people can relate to people who have those esoteric discussions, those very esoteric discussions that those guys have, which is way above my understanding. At least, hopefully, I can speak to the more plain and simple-minded people a little bit like me, can then understand, and at least we can philosophize at our level about Bitcoin. So staying humble and stacking sats. So what exactly does that mean, staying humble and stacking sats? Well, you're understanding that you can't predict the markets, you can't predict the future. And so the best strategy that tends to work, if you know you can't predict the future, if you know that you just don't know what's going to happen in the market, you know that in the long run, Bitcoin will succeed. You know that in the long run, Bitcoin is the superior asset. You know that in the long run, good money will always prevail. If you understand those very basic principles, and you understand that, then you should have a low time preference, a long horizon view about this, and say, well, I don't know what Bitcoin's price will do today. It could drop 60%. But in the long run, Bitcoin will be successful. Then what you do is, because you can't predict the ups and downs of when it's going to go down, and timing it to see when you're going to buy Bitcoin when it's low, you just don't know when it's going to be low. Just simply take a very simple approach of dollar cost averaging on a regular basis and just buying Bitcoin. That's just staying humble and stacking sats. That's what that means. For me, that is the second fundamental principle of a Bitcoin lifestyle, or fundamental characteristic of a Bitcoin lifestyle. Someone who has a Bitcoin lifestyle will not be worried about the day-to-day movements of Bitcoin's price, but rather they understand that in the long run, Bitcoin will do well. And so they will just buy the amount of Bitcoin that they can buy using their, whatever percentage of their savings, of their regular savings, a percentage of that, and use that to dollar cost into Bitcoin and buy Bitcoin on that basis. Now, someone who's living on a Bitcoin lifestyle will do absolutely that. They will stay humble and stack sats. You wouldn't go overzealous and basically borrow money to buy Bitcoin, because if the performance of Bitcoin in the short term depends on that loan or that money that you borrowed, then you are not staying humble. You might be stacking sats, but you're definitely not staying humble, right? And you are going to get wrecked. You will absolutely get wrecked. Now, obviously, there are people who borrow money at a fixed rate and pay a fixed amount, and they could pay a fixed amount from their salary. That's the sort of thing that, not salary, I mean salary or whatever, income, revenue, whatever you want to call it. And that's the sort of thing that Michael Saylor does. Well, is Michael Saylor staying humble and stacking sats? Well, he thinks he's staying humble and stacking sats, and maybe with his own complex, he's a very complex character. He's a very, very intelligent man who obviously very eloquent, but also he's been running a company for many, many years. And so he knows and understands the market better than I ever will. So probably in his view, he thinks he's staying humble and stacking sats, and good luck to him. But but for someone like me, I couldn't do that. I just need to just literally stay humble and stay within my financial means. Whatever additional excess income that I have, I can use that to regularly dollar cost average and buy Bitcoin. And for me, that's staying humble and stacking sats. Now, on the other side is what we call leverage, which is different. I mean, leverage can take different meanings, but leverage in the sense of money that you're borrowing, for example, from an exchange, which could be subject to margin call, and that type, like 2x or 3x, 4x leverage, 5x leverage, 10x leverage, 100x leverage, and 200x leverage. Oh, seriously, why would anyone take out a 200x leverage where a 1% change in the price of Bitcoin either way could either be a significant increase on your original sum, or your original amount, or a 1% decrease in the value of Bitcoin could mean that you're wiped out completely and you've lost your initial investment. Now, that is definitely not, that is just reckless. And if you're reckless, you deserve to be wrecked, in my opinion. So hopefully, I'm sure everyone gets the point that I'm trying to make there. So that's the second principle for me, is staying humble and stacking sats. And then finally, the third is to strive to understand the significance of Bitcoin and why it is unique. And for me, I think this is the biggest thing, because this goes towards understanding Bitcoin, because Bitcoin is such a complex thing. And ever since I fell into the rabbit hole, I've read so much about Bitcoin. I've listened to so much podcasts about Bitcoin, but I still don't know enough about it because I'm not technical enough. I can't write code. So I don't really know or understand all of the nuances with the code itself. But I understand it. I understand the workings of it at a basic level, obviously. But that comes through investing the time to learn and understand what Bitcoin is. Because the more you learn about Bitcoin, actually, the more you learn about the rest of society, the more you learn about the rest of the world, the more you learn about how the rest of the world works. And some of the books that really opened my eyes were obviously the Bitcoin Standard and the Fiat Standard. I've read both of those books. Fantastic books by Saifedean Ammous, of course. Absolutely love Saifedean Ammous, and I also listen to his podcast as well. There are many books I can basically throw out here that I've read. All of them really fantastic books. Nick Bhattia's book as well. Yeah, I could go on. Layered Money is also, yes, Layered Money was a brilliant book. I mean, I could go on, but I'm probably drawing a blank here. But going back to the subject, because I'm sort of digressing a little bit here. Going back to the subject, so it is important to continue to learn about Bitcoin, because the more you learn and the more you understand, the more your confidence in Bitcoin will grow. Once you understand the technology, understand why it's so good, it sort of helps you increase your knowledge. But because when you first get into Bitcoin and you don't really know much about the technology, then it's impossible for you to have the confidence to say you're going to invest a certain amount of money into it. But as your knowledge and understanding grows, the more you'd know to be able to put whatever amount you feel comfortable into Bitcoin. And also you're able to then actually better adopt a Bitcoin lifestyle, like, for example, things like running your own node, and the importance of privacy, and being able to confirm your own transactions on the Bitcoin blockchain because you run your own node, and being able to there's just so many things that you can do that it makes it so private. Understanding the Lightning Network, being able to open Lightning channels and then carrying out your transaction on the Lightning Network, which is the second layer to Bitcoin, which is a lot more private. These things are just absolutely amazing. And just learning more and more about Bitcoin means that you're able to gain the knowledge. So I think that's a very powerful thing. I think I've waffled a lot. I was supposed to only do about 40 minutes. I think I'm probably 45 or 46 minutes into this podcast already. But in all fairness, I did start a little bit late, so maybe I can be allowed for that. But I hope that sort of helped. I'll delve into this topic a little bit more. But especially this particular part, because I don't think I've done it enough justice. Why Bitcoin is unique. I think just going into that alone is an important step, and I definitely will do a separate episode about that. But other than that, thank you very much for anyone who wants to join this live presentation. Feel free to do so. The link is in the description. All you need to do, I think I might move these to 10 o'clock during weekdays, because my weekdays tend to be a lot more jam-packed. So, but the weekends I might keep them at 9 o'clock, but at weekdays I might shift them to 10 p.m. UK time. So feel free to log in on weekdays at 10 p.m. UK time, and then we can get the show going. But other than that, you can also listen to it on YouTube. Thanks to anyone who's listening and who's subscribed. I really appreciate you, and hopefully I'll continue to bring you content that's hopefully listenable. And until then, don't just adopt Bitcoin, adopt a Bitcoin lifestyle to avoid getting wrecked. See you next time.